Hello, everyone. It's Tuesday, I believe, the 27th of December, and I decided to do a quick live stream. We have some news coming out, consumer confidence coming out here in about 7 minutes. I'm going to make this pretty brief. Just go over some market analysis, no more than 30 minutes, hopefully in the 20-minute range. Um, and we'll go from there. Talk about each pair, what's going on. Um, what's good to trade, some of the news later this week, and all that kind of stuff. Uh, so if I'm gonna pull up some news, my news site. Okay, so this is just forex factoring. You can see that right now it says on my computer it says it's 9:53, so 7 minutes before the consumer confidence comes out. I'm not expecting that to move the market too much. You can see the forecast is pretty close to the previous number, so I'm not expecting any surprises here. But if the number is quite a bit different than the forecast, then yeah, it could jump um, on the negative or positive side, such as some volatility that could happen. Uh, Later this week, there's definitely more news, but it doesn't really come out until Thursday. Um, but there's just not a lot in general. Um, it's not going to really hit, the markets are not really going to take off uh, until the beginning of January. So then we start to see some news, more news in the first week in January. January is going to be an interesting time because I mean, it's the new year. There could be some strange volatility. Uh, Donald Trump's becoming, obviously, they're not the inauguration later in the month. Nobody really knows how that's going to go once he becomes president. We just know his 100-day plan. We know his I think his 200-day plan. Uh, but that's his plan. We don't know how much of that plan is actually going to come into fruition. So let me see. Okay, so we have a couple people watching right now, or a few people watching currently. And for those of you wondering if I'm still holding on to my trade, I am. That one lot Euro USD, as you can see, I still have my position from the FOMC, and I'm holding it. Now I don't really see, I don't see a whole lot of reason to get rid of this trade yet. I'm going to check one more site. Now the thing is that I want you guys to see me do is I'm basically researching and doing everything that I'm looking at the charts for the first time and the news for the first time today. And I'm just seeing what the outlook for some of these pairs are, what people are talking about, things like that. So you can see right here, Euro US dollar forecast modest bullish tone and thin trading. So yeah, at least for FX Street is saying that there's not going to be a lot of volatility, which is true up until past the new year. So the volatility could be low, but in December there's been known to have some pretty big spikes. So there could be a really big push in volatility at any random moment during this month. During the last 3 days or 3 or 4 days of the month. Say beyond the a rally in gold prices, action is extremely limited in the financial boards, with major pairs trading around Friday's closing levels. The Euro US dollar pair hovers within 25 pips of the 1.0440 region, with the European microeconomic calendar empty this Tuesday, doing little to help the market movement. So I guess there's not much to really expect with the Euro US dollar. I'm kind of waiting it out to see if anything really changes. Now, they're expecting some minor movement up, and I would expect similarly here, because there isn't a lot of news on either side from Europe or from the USD. I'm hoping to see something here with the consumer confidence. Like, traders are looking for anything to hold on to their positions or let go, and even the smallest amount of news, like the stuff that you're seeing today, um, like this, the consumer confidence, which comes out soon. Even the small amount could help or break the USD, um, and that small amount of news could really drive um, the markets in a certain direction because there's just not a lot going on. So traders are looking for pretty much anything for volatility, and that might not bring a whole lot. So I think even if it's negative USD for the consumer confidence, I think I still will hold on to my position. I'm waiting for a better reason to exit this position. Now, I have already decided that I will close this trade early, likely. And the biggest level that I'm looking at not breaking is the 1.05000 level. That's a pretty important level for me. If the market candle closes above that, above that level, then there's a possibility that I may close out my position. Now it depends on how powerful that candle closes above that level. Will determine if I hold on to the position or not. Now, for me, that level broken, or the 1.5 level, would put my profit down to about 1,200 or to 1,250. So not a ton. Let's see. A trader is asking, am I streaming somewhere else? No, I'm not streaming somewhere else right now. I used to be streaming on forexsignals.com. And I've recently stopped doing that. There's a possibility in the future that I may come back to forexignals.com, but I'm not really sure at this point. So I just do my own streams for now, and I get about anywhere from 10 to 15 live viewers during the stream, or I have been. I only started. This is probably my 6th stream. Just doing it on myself. So not a lot of live people watching, but I do get a lot of people watching the video later on, the stream later on in the day or through the week. So the outlook for me right now is still short Euro US dollar, even though we could have some push back to the 1.05 level. So I'm looking for it to range in that area. So I believe throughout the rest of the week, we could see this kind of action going on with the Euro US dollar. So you can see this sort of range area here where it's been a bit flat, and it's just been kind of going up and down in there. So I'm not expecting a continuation of the trend this week. But if it does break this level by chance, and it continues down, it could hit this level next. I do think that it will continue down in the longer term. How long it will take to break this level, I don't know. I would guess probably in the first week or second week in January. Now, the outlook could easily change at any given moment, guys, where the bias is short on the Euro US dollar, and that could change to long at any time. Now, how does that change? Well, if somebody comes out with a statement in Europe, or the outlook in Europe is changing, things are getting better, that could change the how the Euro US dollar behaves based in Europe and the news that comes out there. I don't see a lot coming from Europe this week. Let's see. I don't see anything coming from really anything pretty intense coming from Europe. At least that's scheduled. But anybody can say something, or an important figure in Europe could say something that could change the outlook of the euro, which, in my opinion, is down. Oh, cool. Thanks for watching my old streams. Yeah, for sure. So the outlook on the pound. Now, this has been going down pretty steadily, even during the holiday too, where it's been making new lows, and it's been fairly volatile too. I haven't been taking any trades on this pair, and I do think that this has potential to continue moving down. The news for the pair is also not very full this week for the pound. So I believe that it will continue its downward spiral, but how much we could see some kind of retracement here if we're looking at price action. So when it comes to fundamentals, yes, I do think that the overall picture is still down on the pound. But when it comes to price action, we have an inside candle here. We have another small one here at the same level. So this could be a sort of a divergence happening here with a potential for a bigger retracement or bounce or pullback, something there. On the 4-hour chart, we don't have a lot of price action. We do have the inside candle there. We do have one forming here. This inside candle or this candle doesn't end for another 2 hours or so. So some time left on that. So on the 4-hour, it's still looking kind of down. On the 1 hour, it's down. The trend and the movement is definitely down. But price action is telling us that we could have a bit of a bounce here. So the UJ still been going up. It's been the yen going up has helped a little bit on the euro, pushing the euro down. So like I've said this plenty of times before, and I continue to say it, when the euro is moving down, the euro USD is moving down, the UJ or the US dollar Japanese yen is typically moving up. And it's been kind of flat also over the holiday with a slight push down. We have the lower highs happening here and the higher lows. So we have this cone action here taking place where it's going into a small channel, and it looks like it's setting itself up for some sort of breakout or potential breakout, either on the top side or on the lower side. So maybe a little dangerous to trade this pair right now. For those that are watching, be watching for this, because the low volatility can really get you stuck in something once the volatility starts picking up. So if you, let's say that you enter a sell right now or a short position thinking that this will break its cone and head down, that could be a little bit risky of a trade, because the low volatility, we don't really know what's happening, and then once it picks up, you could be stuck in a trade that doesn't make any sense because it looks completely different and it finally broke out of that cone. So I would stay away from the UJ right now until it has a better direction on where it's going. Now if we look at the longer term trend, it's easily on the upside. So you might think, well, it's really on the upside, it's pretty obvious, I'm just going to take a long trade. Maybe not a great idea, because we want to see the levels here. We want to catch these levels to see if they are if the price is going to behave around those levels. And these are the higher lows that we're talking about. And there have been higher lows in this on the 1 hour, including this one here. It's just really weak in here. I don't trust it. And if you were to enter anywhere, I would have entered right about here at this level, and maybe you would be in a few pips profit. But it's not a lot. It's only 37 pips. And if you were to trade that level, you would have been a little bit lucky, because the price action in here is a little bit tricky and a little bit messy. So not even in this area is a great place to buy. So I would wait for a stronger level to be hit. And the stronger level to me is this is the weaker level. This is stronger. So I would wait for price to bounce back down, hit this level, or get close to it. Get some candle hints, like an inside candle or bullish engulfing on the technical side before pushing back up with the trend. All right. Do you always trade naked? Your charts are so clean. Yes, I do. I always do trade naked. I have. I don't even need this EMA. I haven't always traded naked. As you can see, this sometimes I use little indicators, but I mean, this is a trend indicator, which I don't really need because I can tell where trends are going, at least in the past tense, what they look like without any indicator. And so how I trade, Sergeant, is basically I look for the overall news. So I look at the news, see what's coming up, um, and I also read on places like FX Street to see what traders are talking about. Like what's the tone of the um, of the major pairs or the pairs that I'm trading. To see if the bias is changing. Are traders getting rid of their shorts and going long, and or vice versa, to see where the weight is going. And sometimes it's a little bit hard to tell that. Right now we're in kind of a dead zone because there's no news. But after the FOMC statement, there was a huge push on the euro US dollar down because of the interest rate, the rising interest rate, and the future interest rate increases as well for next year that they're scheduling. So or that they're planning. So that's still in effect. The FOMC is still in effect. I still believe that traders are holding on to their short positions. But as the longer this flat period goes on for, which has been now since the 19th of December, so in here, that's when things started going up a bit. We have a retracement, a pullback. And the longer that they go flat, the more insecure people get with holding on to their positions, because that means that things are changing, price action's changing. If it's not pushing down, then the bias may be changing. If it's not pushing up, then oh well, maybe it's still a good place to get out, because at that point it's very similar to what I was saying on the UJ with the cone that's happening. And then it gets tight, and then it breaks out, and in a big way. And traders don't like that. It's a little bit of a gamble, and so it's possible that I may just close out in this area at some point when I see that things are starting to slow down. Okay. Let's see. So do you base your entry on new events such as FOMC? Not necessarily. This was a more of an anomaly event for me, entering 5 minutes before the FOMC. Now, on the forex thread or the forex website called forexsignals.com, I posted this trade there, and I got a lot of feedback on it. Mostly negative because of the risk level that I took on this trade. It was a bit of a gamble, and I'm not going to lie. It was a gamble. It's a one-lot trade on a very small account. And it was some skill and a lot of luck. The luck that I had was being able to pull out in profit on a one-lot position. My leverage was really low at the time when I took the trade. It was only about 100%. And the most drawdown I hit was about 6 pips, which was really low. And then the FOMC statement came out, and I was able to hold out the position and saw the language in the statement, and it worked out pretty well. But the biggest the biggest problem with this is the risk size. Now, I took this risk size because I felt like I could run with this opportunity. The FOMC statement was likely to be positive USD. And it was, and I took that risk, and my calculated in how I was going to approach this was, if FOMC statement was negative USD, then I would pull out of my position instantly. So I was basically refreshing my news page to see what was happening at that time. So it was on, I think it was on FX Street. So they have the economic calendar. And they have their statements come out pretty fast, usually right on time. It was going to help me to exit my position right when the news came out if the FOMC did raise the rates or not. And they did, and it happened to with a very strong outlook on the USD. So it was a mistake. It was a mistake on my behalf to take this kind of risk. But I was really willing to take that risk on this account. Now, it's only $2,400. And if the FOMC statement was negative, USD, meaning that they didn't raise the rates and it shot up, then yeah, I could be in trouble. Now, there's a couple of things that could happen. Yes, I was planning on losing maybe $200, $400 on this trade if it bounced, 20 to 40 pips against me. But there's also the potential that if that rate didn't raise, that it would shoot up hundreds of pips in a matter of seconds. That's always possible with these kind of things, especially when people are really planning on them raising that rate, and they don't, then things can get really volatile very quickly. So I would have been lucky to get out likely at 20 to 40 pips. Now, there was a trader on forexsignals.com that told me, oh, well, you were basically risking your entire account. That's true. Even though I thought I could probably get out at 20 to 40 pips, with that kind of upset in the news, it could shoot up very quickly, and I could lose half or maybe potentially all of this account. Now, I was aware of that. I was aware that I could lose the account, and I took that risk, and it's so far paying out. Now, I'm not going to get my goal, which was about $3,000. Now, I wanted to hit about $3,000 profit, and it's been bouncing back and forth from $1,500 to $2,000. Like I said, I'm probably going to close out my trade if a candle closes above this level, and then I'll just take my profits at that point. Now, they won't be 3,000, but that's okay. I want to be safe with this trade. I don't want to miss out on too much profit. I'm watching the levels. This 1.05 level is a very strong level, and if it's broken, then I would think that there would be more on the upside. But also the market could play like this, up and down, break the level in the next candle after it, close below it, next candle after, break, and then just back and forth. So it could play a lot of that level, and I might get chickened out or scared out of the trade by this level, depending on what happens with the price action on it, and also, the fundamental news. But I'm not expecting any surprises. The financial markets will be pretty flat up until after the New Year's. To answer your question, I look at price action or I look at the technical and the fundamental in my trading. I look at the outlook of the fundamental and if there's any big news statements coming out, and then I look at price action to see which levels traders may use for either profit taking, stop losses, or entries. And so that's why I look at things like inside candles, like you see here, an inside candle, inside candle. Sorry, I have the scroll wheel on. Hold on. So yeah, inside candle here. So we have a bearish candle, new low, inside candle, bounce. The inside candle here after a big push down. We had the retracement up. Inside candle here, did push down with another bounce up, inside candle, and an inside candle. So this area had a lot of selling pressure, and that's why we're getting so many inside candles. It was a bunch of fake outs on the upside, and then it did push back down right before the holiday break. And then this happened, and I knew that when I saw that candle, actually when I saw this one, and this one, I thought it might bounce higher. It didn't. It faked out, and then it hit this one. It hit the new level, and then it did bounce up from there in a pretty big way. Now, typically, if I was on a broker that allowed me to hedge, I would consider entering longs on these positions on the way down. So holding on to my large short position, and then entering hedges on the upside. I have a short position here that was entered later on. I entered that on this candle. So I saw the push up, a nice reversal candle here. It did bounce down a little bit, but it did end up continuing its pullback from this level, and it shot up. I thought it might close up before the holiday above that 1.5 level. Then there was a huge wick candle So I guess it's just a fake out here with the big push, and then during the same hour it pulled back down. Um, so it showed me that this level, this 105 level, has some merit, and it should be looked at as something pretty important. And that's why I'm basing my trade off of that. When I saw this candle and how it reacted to that level was a pretty good indication to me of how to play that level. All right, the Euro Pound. Now, I'm not sure how many of you guys trade this pair, but I actually am trading it on my EA. So my EA has been taking some positions here. And this is the small account, so the $530. It's made $30 profit, which is 6%. I'll show you what that looks like now. Okay, so this is the count. It refreshes all the time, so it's 6%. We're looking pretty good. This month we're at 3.92%. The current drawdown is 2.78%, so not huge. We entered our first trade here, and you can see that the overbought on over the 70 level on the EA, and we had entries here looking for a potential pushback down. Now we got really close to actually hitting that profit, so we had 4 positions here. And then the pullback on that move. Now I think I needed it to go just slightly lower, so about 7 or 8 pips lower, and then we would have had a closeout of 50 pips profit. So I'm looking at 50 pips amongst these 4 trades, or these 4 positions. So 50 pips would be right about there, I believe. So these 2 trades would be in profit. This one would be about break even, and this one would be a slight loss. And they'd all close out at the same time. So it's a basket trading EA. It shows a long-term history, no losses since 1994. When I say no losses, I mean that overall trades are closed in profit, and they are very smooth, as you can see here. So this is what trades will look like once they close out. So it looks like you have a very smooth balance curve. And that's what you see here. When these trades when this moves down, all these trades will close out at the same time. Okay, and unfortunately I can't hedge on this broker, so I can't put any buy or sell orders in at the same time. It just has to be only buys or only sells. Make sure I don't have any questions coming in. Okay, cool. So next, I believe that this will come down. We need to see a little bit more volatility. The only thing that's seeing any volatility right now, or any movement, is the pound. And when the pound USD is moving down, the euro pound is moving up. That's why this pair ranges so much. The euro pound pair ranges so much because it gets pulled by 2 very volatile pairs. So which one is moving the most, in which right now the pound is more volatile, it's causing the movement up on the euro pound, because it's pushing down in a bigger way while the euro is pretty much flat. So I need this to come down a bit. We did hit a double peak here on the 1 hour, so this could reverse at this point. It does look like it's showing a bit of a resistance here, which means that we could see a push down from that point. We'll just have to wait and see, but the volatility is low, so who knows. The euro Japanese yen, not a lot of movement. It has been going up. If we want to scroll out a little bit on the 4 hour, it has been making some really good levels, higher highs. Higher lows and higher highs. Very nice trend line, or trend on this pair right now. And it's continuing to rise a bit. Now, if you want to try to grab these levels, it's really hard to do that because we have to wait for a push up, push down, push up, push down. Now, how do we find these levels? Now, these higher lows that I'm talking about. because if we see this here, let's say that we don't know what's happened after that, and we just see this level. We want to try to catch a pullback, and then we want to try to enter at this point, right? That would be the best place to enter on the trade. Well, how do we find that? How do we find those levels? It can be really difficult, and some traders think it's maybe in some cases possible. Well, we look at how price behaves at that level. We see that there was a wick there. We see that there was an inside candle, which means that an inside bearish candle means that it could push down from that point, but it shoots up. So most traders won't enter their trades until this point. They see the bullish reversal happening, but this might be a little too late. I don't like this kind of movement because it's really hard to enter a trade after such a reversal or a continuation of the trend happens in one candle. As you can see, that candle is pretty large at 167 pips. So to me, that move is pretty much done. So I let that one pass. So exit out on that, and let's look for the next one. So it pushes up, pushes back down. We're looking for any potential entry above this level, right? And we see that we have the push down, new low, reversal candle right here. So why is that a reversal candle? Let me zoom in on that. Oh, the scroll wheel. It's a reversal candle because it breaks the low of the previous candle, so the bearish candle there. And we have this small wick, and it also the body of the candle closes above the open of the previous candle and makes it a new high from the previous candle as well. To me, that is a pretty good indication that this trend may continue. Now, a lot of people will be looking at a few things. That might not be enough information for them to write off on. So a lot of guys I know will not only find this as a hint to enter on the next candle, they might wait for this level to be broken. So they would maybe look at entering at this point. That's too late for me. You miss out on this whole movement from here to here, or from this point to this point. You miss out on all those pips. I'd rather enter early and try to gain 60 extra pips than entering late. That's the problem with most traders, guys, is that they enter their trades so late, causing them to lose out on pips, or just to enter when the trend is ending, pretty much. So I would typically enter a trade here with the trend on this candle. Now you could keep your stop loss here if you wanted to. I typically don't have a stop loss in pips, but I do have a stop loss in percent. So what I would maybe consider doing is entering my first trade here, so trade 1, and then trade 2. So if it did end up going down and hitting this level, I would put a pending order in here and enter trade 2. And then trade 3 would be down at this support level, and so on and so forth from there. Now you could also wait for another inside candle or reversal candle at these levels to see what's going to happen. That's also a thing that you can do. It may keep you in trades, or it may stop you from entering so many trades, which is a good thing. So I use a combination of both. I look at the price action. I also look at the levels for pending orders. And if a trade goes against me too much, I'll close it out. I'm with the trend, the overall movement. I am very skeptical of trends because just because it's moving up in a big way on multiple time frames doesn't mean that it can't just reverse instantly. And the bias for that pair is completely changed, and things start moving on the downside, and then the pair starts to make a trend on the downside. So just because it's been moving up for a long period of time doesn't mean it's going to continue, but it very likely could. So we ride these levels until we can't anymore. So this is our first entry, let's say right here. Let me get rid of this. So this is our entry 1, and this could be our entry 2, entry 3, entry 4. So let's say this starts to move down. Entry 2, let's say this is 1. 2 gets executed here. 3, gets executed here when the market continues down, and then 4 if it continues even further. Now, when do we cut it out? Well, we want to see what levels, what of these 4 levels are the strongest ones. And how do we do that? Well, we look at the levels on the side on the side of MetaTrader. We look at the whole and half numbers. These numbers, the whole and half numbers, are a lot of times, or a good portion of the time, on the major pairs. Places where traders like to enter their positions or exit their positions. They're just weighted areas, especially that could cause volatility, or traders could close out their positions for profit taking, all that kind of stuff. Looks like we have some questions coming in. Hey Ryan, if you put in profit for EU take out, if you in profit for EU take out, mate. Yeah. So what is your take profit on the first sell? I don't have one right now. So for coming back to the Euro US dollar, I've mentioned before that my stop loss will be here if at the 1.05 level, if a candle closes, so the body of the candle closes above that level, then I will likely close out my position. And that will be a profit of, let's say that it closes out 10 pips above the 105 level. So I'll have 128 pips profit on the first position and a loss of 79 pips on the second, but the difference is the risk on the second position is 0.2 lots versus 0.1. So in this case, I'll probably will close out in about, if it closes 10 pips above, will probably be about 1,200, 1,150 of profit. Now I'm not showing off here, guys. I'm not showing that I'm in almost 100% profit on my account. That's not the point here. The point here is to show you the position, the entry. I'm actually embarrassed by this level of this, how high of lot, how many lots I used on this trade, because that's not what you're supposed to do. This is not supposed to be the example. Now the entry, yes, good entry, and it was based on legitimate stats that I had been following on the FOMC, but the risk is not recommended. This is not how you're supposed to trade when it comes to risk management. So please don't take lot sizes of one standard lot on a $2,400 account. That's not how you're supposed to trade. I took it because I took the risk on this, and I was willing to risk the $2,400. If you don't have money to lose, don't take this kind of risk. All right, and that's my advice to you. So typically on this trade, if I had a $10,000 account, I would be looking at maybe 0.2 lots on this position, maybe 0.1. So 10 times less the risk that you see here. Okay. I would take profit now and sell at this level. So yeah, that's something that a lot of traders can do is actually close out the position right now and then enter another sell, and then write that one out potentially. I don't necessarily agree with that. I mean, it's not the worst advice in the world, because what Muhammad is saying is close out this position because the risk is so high, and then enter or leave this position in and see what happens, so you don't lose out on profit just in case it does hit this level. It's decent. It's a decent strategy. It's something that I will think about, Muhammad, because I don't know how much longer I want to hold on to this for, but I really don't mind holding out above this level. Because it is strong. I do think that the overall picture is still down on the Euro US dollar. Something to think about though. If you watch my stream the rest of the week, it's something that I will talk about. If I make that decision, I'll tell you why I did, and it likely won't just be because I felt that this was a good place to come out. I have to have a reason to do that, either price action telling me, or the news telling me, that this is a good time to close out the position and take out my profit. Okay. So we'll have to see. I'm going to see how this week pans out, and I'll let you guys know when I decide. I mean, you'll obviously see. We'll see when I decide to close it out. Yeah, it's hard, Muhammad, when you say also the EU is looking to go up. We just don't know that yet. If it's continuing, yeah, we've had a bit of a pullback here, but we do know that the buyers are struggling at this level. It's struggling to break that level, and like I was saying before, I don't know how long you've been watching for it. If that level is broken, then that shows to me that the buyers may be starting to push this up further, and this could extend. So I'm trying to play this smart here. Some may think I'm playing this greedy. No, I'm just trying to play this in a smart way, and that is to hold out on my position until on specific levels that show a lot of importance to traders, especially those that are holding short positions right now. All right, so I'm going to cover, I've been going for about 41 minutes. I'm going to cover one more pair, and that is the AUD USD. This pair, actually the AUD USD and the Euro Australian dollar, because they're both kind of correlated. Now, the big push down. This has been really suffering a lot through FOMC and after. So this has actually been a much better trending pair considering the FOMC statement on, I think it was on the 4th, was it on the 14th? Let me see. Yeah, on the 14th. So I had the total push down of 288 pips, which is really unfortunate because I was only 12 pips away from my take profit at that point down there. But the AUD USD has moved down since that time 345 pips. So it's actually been a much cleaner move, but it's really hard to know which pair is going to move in that way. The Australian dollar has been seeing a lot of weakness, more so than the euro at this point. So we have some really good levels, swing levels, and it's looking like it could be topping out here on the pullback, looking to go south again. Definitely down on the when it comes to the trend outlook. This may not be a bad place to start looking for potential entries. We are near a whole number, so 71.9, and we have had a inside candle. And let me make my inside candle here in particular. I would probably think about entering this trade. But I think I'm going to still hold out on any more euro pairs, because if I sell the USD, that means I'm still buying buying US dollar currency in general. And you can see here that's what I'm doing on these two pairs already. So if I entered a sell or short on the AUD USD, that means I would be short. I'd be long on 3 USD pairs. And if something really did change, the outlook on the USD really did change, then I would be in the negative on all of my positions, or they would, at least these ones would start pulling up, and I would start losing profit, and this one would be in loss. It's a good place though. For those of you that don't have any multiple USD positions in, I would say that this is a pretty dang good area for a continuation of the trend on the downside. So what I'm going to do is I'm going to mark that. Excuse me, sorry. So I'm going to mark this level where I would enter my trade if I didn't have these 2 euro US dollar trades in. I would enter at, on my account size, $2,400, probably no more than 0.1 lots, and likely I would probably go 0.05 on this trade. Yeah, probably 0.05, so I could potentially enter some basket trades at different levels, so maybe here or here, just in case it did go against me. Um, you can see the inside candle, but you can also see the current candle, how there's a wick on top of it. So they're showing that there could be some resistance at this point, uh, especially with the candle action here. So I recommend that. And again, I don't know why I just deleted that, but I'm going to mark this again as the entry. And we'll come back to it tomorrow and see how this position has panned out. This is my call for today. For those of you that are watching, I would enter a short position on the AUD-USD. Watch your risk level. If you're playing this as a stop loss position, I'd look for a stop loss. That's a pretty good level here for a potential stop loss. I'd look for either a candle close above that level, or just even that level in general. I'd like the market to bounce no farther than that and then reverse if it continues up. Profit, if I was conservative, profit would be about 25 pips down at this level. So at the lowest point here, where we had an inside candle, I'd look for that to bounce down, so only about 25 pips if I was conservative. Now, if I was a little bit more on the risky side, or wanted to hold this longer, I'd probably want to keep this 1-to-1 risk ratio. So if this is 36 pips on the stop loss side, I'd want to make this a 36 pip profit. And so I'd pull this down a bit lower than that. So it would just beat the level. Now, if you really want to hold this trade for longer term, I would hold it for as long as you can, really. So how do we hold the trade for long periods of time? We look at the levels, at the swing levels. Now we can see that this one wasn't very clean. This was broke. This one was broken. This one was broken, and then eventually it found itself here, and then it pushed down. So there was a bit of action that this might push up, with a potential trend starting in this area. But you can see that it broke here and ended up pushing down after that point. So we want to watch this area in here was a little bit sketchy on the way down, which would probably be a good place to close out a short position. But especially when this level was broken here, and then third when this level was broken. Probably a good place to exit a short position would be in this area if you entered back before that. So I would be looking at this level. If the market pushes down, breaks this level here, so we're talking all hypothetical, but it's because things can happen within the next 24 hours before I even have the next stream up. So we're talking hypotheticals here. We're into our trade, which is already in profit by 2 pips. Then let's say it pushes down, it breaks the level, makes a new low, and then after it breaks that level, it could reverse at any point and have a pullback. Let's say the pullback bounces here back to the same level and then reverses again. That happens quite a bit, where the pullback can actually find the support level here turns into resistance, and it comes back down and pushes on the downside. That's always possible. But it also could push down, break the level, and then push up past that level, and then find support or resistance back at that same level. And so that can also happen. And if the trend does decide to start changing, then I could break that level and look something like, or we could have a fake out. It could look something like what we just went over back here, where the trend has the potential of changing, and it looks, because it's making new highs, higher highs and higher lows, so looking like it could change there. You could say the same thing in the future, and so we can potentially get faked out with price action that looks like that. And if we do get faked out, that's okay. It's better to protect ourselves than to hold positions for a long period of time. So let's say this level's broken, it breaks, it goes lower, it shoots back up to that level, and if it does come back up to our level, and it does break a candle close above it, then I would potentially look for closing it out at that point. If you want to actually keep your stop loss, you could leave the stop loss at your original level to see if the next support resistance level is going to be broken. And if the next one is, then it's looking not so great that your sell position is breaking a lot of support resistance levels. There's some buying pressure happening, and so it might be the best idea. It might not be the best idea to hold any longer, losing more and more pips as this trend continues to change direction. So that's how I play these things. I look at the price action to see where to hold, how long to hold, and how short to potentially hold. I'm usually conservative with my positions, so I'd look for profit down here back once it pushes back down. And if it continues higher up, I might look for a second position, so position 1, position 2, and then a potential reverse or continuation of the trend at that point. So that's just how I look at it and how I play things out, and always constantly looking at what the future may entail before entering a position, and then letting that be my gauge for what to expect from every position that I take. All right, so we've been going for about 51 minutes. I think I'm going to call that a morning for the stream. Continue to keep my trades in, looking at the Euro-US dollar. I've marked the 1.05 level to see. I do feel like this will push up at least to this level and potentially will bounce up and down there for the rest of the week, but we'll wait and see. All right, guys, I think that's it for today, and I hope to see you next time. Thanks for watching. Bye.